Welcome over another episode of Financial 15, the show where Kevin and I try to pass along some financial knowledge, something that can improve your situation. Do all that in 15 minutes or less. Today, we're talking about inflation. How do you hedge inflation? Some very good information. You want to stick around.
Yeah, this is a big topic all the time. Inflation always comes up, especially right now with the way that things are going at the moment, but it's always something that you have to underlie and consider going forward. And again, you want to know how can you hedge it and things along those lines. If you want more information on this topic or anything else we've done, please visit our YouTube channel and subscribe. Lots of information there, lots of videos to see on a variety of different topics. Also go to our Facebook and like us there. And you can also always visit our website at beckerorr.com. We've got this information and tons of other stuff that you need to know about. But today we are talking inflation. What is it? And what it is, how are we going to hedge against this, Clint?
That's right. So we have to start with that first part of the question. What is inflation? We did a whole video on this. We're not going to spend too much time on what is inflation. We'll spend more time on the hedges, but a very quick summary here. You can look at inflation kind of from two lenses. One is looking at your purchasing power, essentially decreases over time because of inflation. So you have $100, you go to the grocery store. 5 years later, that $100 probably won't buy as much from the store. That's a decrease in purchasing power. You could also look at it from the other side and say, well, price levels, they went up. Prices increase. Same concept. That's all inflation. So losing purchasing power, price levels going up, that essentially is inflation. How do you hedge against that? So this is not going to be an exhaustive list. It's not every possible hedge out there. We're going to look at the four big ones we get asked about frequently. We're going to look at why people think it's a hedge, look at whether or not the price actually kept up with inflation, and then make a comment on the volatility of the instrument there, because that's certainly something you have to keep in mind. And before we do, though, Kevin, why don't we just do a quick little recap here of kind of inflation over the decades, so we have an idea of what it is we're talking about.
Yeah, as we can see, I mean, inflation's been around for a long period of time. Anytime you get wages increasing, prices increasing, the whole nine yards deals with that sort of inflation scenario. But if we take a look back just sort of from the 60s onward, and we decided we'd pick decades so that you get sort of that avenue, you'll see that back in the 60s, things have come out. I mean, we're past that. We're into the baby boomers. Things are going well. You got low inflation. Canada and the U.S. pretty much the same. And as you'll notice going through the whole chart, we are fairly much in sync with what the U.S. does because we are our biggest trading partners. So we're going to have that sort of a scenario. But once we saw the 70s, all of a sudden you're coming off the gold standard. You're coming into the oil crisis. Inflation starts to go up. We're at 7%. The 80s, well, all of a sudden things started to recover a little bit after the big housing market scenario. So you're there. And basically since the 90s forward, all we've seen is declining in interest rates going forward, as well as declining inflation. That's really been a big part. But it is important to know where inflation's been on each decade, because that way it helps us decide whether or not we want to invest in certain things based on the quote unquote, is it an inflation hedge?
Absolutely. And we're using decades here. By no means is that you have to use decades. We just need to pick a start and an end point. So we thought, hey, a decade's a nice round number. Inflation can heat up in, 1979 and go to 1983. There's no reason it has to follow a specific decade. And that data is from macrotrends.net. So certainly you can visit Macro Trends for all the details. We'll go with the first one here, Kevin. And this is the big one, I think. I get asked frequently about, I'm sure you do as well. It's gold. Always. Gold is an inflation hedge. The rationale is usually that gold is a store of value. So we got this fiat money. That's not the case with gold. Store of value. It will hedge against inflation. Well, here is a bit of data. Macrotrends.net, they did a chart, and this chart looks at gold adjusted for inflation. So if the blue line's going up, that means gold is way outpacing inflation. It is winning that battle. If the blue line is going down, that means gold is actually losing and not keeping up with inflation. So I'll make this full screen here so everyone can see. Why don't you walk us through some of the details?
Yeah, I mean, basically, we take a look. I mean, theoretically speaking, gold has not really kept up with inflation over the time frame. And I mean, another point that was always stressed was when you start getting into a recession, you want to buy gold. But if we take a look at the gray bars that are in there, those are recessionary timeframes. If we take a look 9 times out of 10, the gold is actually falling during those recessionary timeframes as well. Yeah. So again, I mean, it's sort of that pattern. If we take a look at it really from the 50s down through to the 70s, we weren't doing much of anything. All of a sudden, we got off the gold standard in the 70s, and gold became a great play to hold on to. Then, sort of from the 80s straight to 2000, it came down again, and then we've had that sort of bounce back up from sort of 2010 to 2020. But yeah, I mean, basically what we're seeing is that gold has had really not that effect as being an inflation hedge as much as people think it is. It's always been described that way, but reality seems to say something different, doesn't it?
Yeah, I mean, really, it's 2 decades here where it has been a phenomenal inflation hedge. I'll show you on the chart here. That 70s you talked about, although the mid-70s you did definitely see a drawdown, but 70s, phenomenal inflation hedge, definitely outpaced inflation. Then you had 20 years where it did kind of nothing. You lost money. But then from 01 to 2011, another phenomenal decade where gold did quite well. And then we're still below the prices we were in 2011. So you had a decade of nothing there. I should mention inflation adjusted prices. So when you see this peak here in 1980, it says $2,400. Well, gold wasn't actually $2,400 at the time. They're adjusting for inflation. They're saying, all right, so if you took the price of gold in 1980, what would it be worth in today's dollars? Well, it'd be worth about $2,400 because of inflation. And you'll notice the price today is less than that. So over the last 42 years, gold actually hasn't kept up with inflation. That's essentially what the chart is telling us there, Kevin. But
exactly,
that's gold. Could be other reasons to own gold, but specifically on inflation, doesn't quite measure up. Like we said, there's really been 2 decades where it has kept up with inflation. The rest of the time, really not the case.
Exactly.
Yeah, so let's move on to the next big one. I'd say would be Bitcoin, what people call the new gold, right? The digital gold. And often the rationale there is Bitcoin. There's only going to ever be so many Bitcoin. It's going to be scarce. You're going to have a limited quantity. That's what's going to provide a bit of protection, a bit of inflation hedge. We don't have to look at the price because we know the price has just skyrocketed, well higher than inflation. A few of the qualifiers here before I pull up the chart. Bitcoin's only been around for so long. I think it was 09, around that time period. So the bulk of the time Bitcoin has been here, it's been a low inflationary environment. Really, we've only seen high inflation for 1 year in all of Bitcoin's life. So we don't have a lot of data here to base it off of. But we'll pull up a drawdown chart here, Kevin, and maybe you can walk us through kind of the volatility people have had to endure in order to get that kind of return out of Bitcoin.
Well, yeah, as you mentioned, I mean, Bitcoin has basically been called by a lot of people the new gold, as opposed to, the old standard where I want to buy this. I want to buy it now because it's a digital currency that's out there. It's moving with the trends of the time. And this is going to be the way you're going to fight inflation. But as you mentioned, it's a scarce supply, just like gold is. So that's another reason why people compare. But let's take a look, as you mentioned, for the volatility. If we take a look at the blue line, which is Bitcoin compared to the S&P 500, you'll notice that the swings are huge comparatively speaking. And as you mentioned, I mean, we really don't have a ton of data on this because we really haven't had any inflation during the Bitcoin era, as it were. But I mean, just taking a look through that 2018, everything seemed to be fairly consistent. You had your all-time high at that point, and then all of a sudden the market collapses down through, and you're sitting there by 2019, it's fallen 80%. Whereas the S&P, no, not quite the same. Same sort of scenario in March of 2020 when we're looking at the pandemic. You're still down around that 75 to 80% line, even though the S&P has fallen, but nowhere near as much as Bitcoin. Then you have that sort of up and down swinging. You're seeing 50% swings sort of from 2021 right through to today. So volatility on this thing is huge. It is definitely not for the faint of heart. But as we can see, as an inflation hedge, we're not really convinced that may be the point, is it?
It's hard to say because we don't have enough data. It's just a short time period. But I mean, if you look, 2021, inflation definitely reared its ugly head, and Bitcoin got cut in half near the second half of 2021. So if something loses half its value when inflation's coming up, it's hard to say it's a good hedge. And the way to read this chart, by the way, if the blue line or the orange line is at the top here, that means that is at an all-time high. And then if you see it dropping, that means it's a pullback or a drawdown from the all-time high. And that the image there is that the blue line has lots of drawdowns. That's the volatility that you'd have to endure. And again, not enough data to really say if Bitcoin is a good hedge at this point, but we certainly know it's quite turbulent. We'll move on to number 3 here. We're going to go through 4. We went through gold, Bitcoin, the third one on the list, real estate. Often folks say real estate is a great hedge for inflation. Specifically here, we have to qualify. We're not talking about your home. No. We're talking about rental properties here. So it's specifically looking at rent. So this chart, and we're cheating a little bit because when you calculate inflation, they calculate rent as part of the equation for inflation. So when they say inflation's up 6% or 7%, an increase in rent is part of that equation. So of course they're going to be connected. It's part of the same formula. But what you see here is from the St. Louis Fed. It's Fred data, and they're looking at the rent on primary residence in the U.S. over the years, and you can see it's very consistent here. So rent, by the looks of it, rarely ever goes down on average. It only seems to go up over time. What are your thoughts here, Kevin?
Yeah, I mean, basically the same thing. I mean, rent is following what the inflation hedge is doing over that time frame. Because as we say, if we were to pick a period in 1950 and use that as our base 100, we are going to find that by the time you get to 2021, 2022, inflation is going to be substantial because it happens every single year and it compounds in that sort of scenario. So you're seeing the same thing in that rent scenario. And as you mentioned, there's really no downturn. Basically, in the Great Recession, we see a bit of a flat line that went through. But other than that, it was right back on track with whatever inflation was doing. So again, using this as an inflation hedge, I don't know if we could go that far. It is a hedge to the point that it is consistently keeping up with inflation. But by the same token, is it better to hold it in recessionary times? Is it better to hold it in expansionary times or when inflation's high or low? That question we can sort of reserve to see.
Yeah. I mean, the important to note here, we're not looking at the actual real estate appreciations. If you buy an apartment block, this really tells us that you have the ability to raise rents on your tenants as inflation gets higher, so you can maintain your cash flow. That's really the what we're seeing. But the value of your real estate would be over and above that, not really reflected here in this actual chart. So if we did the data, and this again taking some inflation from a couple of spots, the macro trends data plus the Fred data, and using our decades as a barometer, you can see in rent in the US kind of follows inflation. So the rent tends to go up and inflation goes up more or less in steps, sometimes a little higher, sometimes a little lower. But again, it's part of the calculation. So when they calculate inflation, they include rent as part of that calculation. So of course, it's going to be correlated. And that's exactly what this is showing us. And then if you did own an apartment block, any growth you had on the actual property would be over and above this. This is really just telling us that rent follows inflation. Rent can be a hedge against inflation because it shows that rent tends to go up when inflation goes up. So we'll leave it there for the real estate. In the essence of time, we'll hit number 4 here, Kevin, which is the stock market. The rationale is business owners, right? Businesses can pass along the cost. Strong businesses can increase the cost of their products, of their services, pass that along to customers. So stocks would be a hedge against inflation.
Yeah, definitely to take a look at that. And all we have to do is look, as we've said, for the decades. And again, we can't use the S&P sort of anytime past the 80s because we really didn't have the index to look at until the mid 70s. So we're basically dealing with both the US and the Canadian side. And as we can see, in the majority of the time, it has been a good inflation hedge. You've had more success by having money in the market on average than you have compared to inflation that's been there. I mean, if we see in the US, the 70s, and of course, and you look at the 2000 to 2009, I mean, if we choose 2002 to 2012, that number might be completely different. We've just chosen the decades to sort of give you that scenario. But overall, on average, it has been a good mark against inflation. It's been a good hedge there because, as you've mentioned, they can increase prices for what they sell. They can increase prices for the goods or services that are offered based on the fact that inflation is coming around. And the majority of people, this is what we're going to have to pay going forward.
Yeah, and again, we're picking the decades, which is kind of random because there's no reason that we have to follow an exact trend within a decade. But you can see in the U.S., inflation about 5.5%, stock market well above that. Same thing in Canada. And you have a number of years where that's the case. So if you looked at a longer-term average, it definitely would be outpacing inflation. So the stock market seems to be a pretty good inflation fighter. Real estate was half decent. Bitcoin and gold, we're not so sure about at the point. But the bigger idea here when it comes to inflation, Kevin, is you have to have kind of an idea of your plan.
Yeah.
Like, what is the goal here? Are you investing solely to hedge inflation? I imagine not. You're probably investing for a different purpose.
Exactly. I mean, 9 times out of 10, your investment goal is not, oh, I've got to go into investing just so I can keep up with inflation. I mean, if all of a sudden inflation hits, that 7% that it's roughly at in the US now, or go back to the early 80s where it's 14 or 15, you're not adding more risk to your portfolio to be able to capture that usually. You've got to figure out what your goal is. And inflation is always considered in there. We always look at that whenever we're doing a plan, but we want to make sure that going forward, your goal is still maintained and inflation is included in that, but it is not the only reason to invest. And that's the same thing. I mean, we've always said, don't invest just for tax purposes. Don't invest strictly for inflation. Isn't that the way we should do it?
Absolutely. Yeah. So your risk tolerance has to bear in mind where you are in terms of your retirement plan, your overall financial plan. Inflation is part of that, but again, should not be the sole purpose. So definitely you got to consider your goal and make sure it's part of your financial plan. If you have more questions, I mean, we did a dive here on 4 topics related to how to hedge inflation. Happy to talk about anything else in the financial world. You can always visit us, chatwithclintonkevin.com. Part of our website, fill in the form. We would love to hear from you. Any parting comments, Kevin?
No, I mean, as you said, high level, touched briefly on some of these topics. If you want more, please contact us. That's good to go.
Take care.